Hello everyone and welcome to Desi Investing, a channel dedicated to investing in the Indian context. Today we are going to see whether it is better to buy or sell options. So jumping to the question, let us see the pros and cons of buying an option. When you buy, the upside or profit is potentially unlimited while the downside or loss is definitely limited. That is, you could be rewarded as much as the stock rises, whereas if you lose only the original investment. On the other hand, when you sell, the upside or profit is definitely limited while the downside is unlimited. That is, only the initial price would be your reward, whereas you could lose everything if the stock price moves too much. Let us also have a look at the difference between trading stocks and trading options. In stock trading, many could be right and many could be wrong. There is no definite winner or loser, but the market always wins. This could be compared to a casino slot machine. In options trading, one person wins and one person loses, and there is no impact on the market. In effect, for one person to win, one person has to lose. This can be compared to a two-player poker game. Let's take an example of buying options. Price is taken on the y-axis and time is taken on the x-axis. Let's say you buy the option at this point in time and the option expires at this point in time. Now, let's assume the stock price is at 70 and you expect it to rise further. Let's say you buy a call option for 4 rupees with a strike price of 75 and lot size of 6,000. You invest 24,000 rupees in this case. In the first scenario, the price rises to 86, you get 66,000 for the option and your net profit is 42,000. In the second scenario, the price rises to 76, you get 6,000 for the option and your net profit is a loss of 18,000. In the third scenario, the price rises but only to 73, you get 0 rupees because the option expired and your net profit is a loss of 24,000. Now let's take an example of selling options. To keep it simple, we'll take the same set of conditions, but instead of buying, we sell the option and see what happens to the person on the seller side. Similarly, taking the price on the y-axis, time on the x-axis, let's assume you sold the option at this point in time and the expiry is at this point in time. Suppose the stock price is at 70 and you expect it to fall. You sell a call option at the same price as before and you make 24,000 rupees in the first place. Now in scenario 1, the stock rises to 86, you have to pay up 66,000 rupees and your net profit is a loss of 42,000. In the second scenario, the stock rises to 76 and you have to pay up 6,000 rupees and your net profit is 18,000. In the third scenario, the stock rises to 73, you don't have to pay up anything and you can keep the initial 24,000 as your profit. Let's look at when it is better to sell. A, when there's a lot of time in your hands, for example, the beginning of the options calendar month, the more time there is for expiry, the higher the price of the option. B, when there's a lot of volatility in the market. The higher the volatility, the higher the price of the option because the risk is higher. C, when there's no news coming. Lower the chance of price change, lower your risk, but of course lower the price of the option as well. Let's look at why it is better to sell. You can always sell at the beginning of the month and exit well ahead of expiry. As time progresses, it is easier to exit if you have sold rather than if you have bought. B, if the volatility is high, the price you get is also high and sooner or later when the volatility becomes low, you can come out with a profit. C, you can make money even when the stock is at the same price, which you can't do by buying an option or by buying or selling a stock. What are the cons of selling an option? If the price moves too much in the opposite direction, you could lose a lot of money by having to pay up the other party. But in general, the broker closes your position before you can lose too much money. However, this itself could run from 50k to more than a lakh. B, if the price moves too much even in the right direction, you would make only your initial investment and not get any benefit by the huge move. In this case, you would be better off by, say, buying a put option instead of selling a call option. To conclude, buying to most people is like a get-rich-quick method. They put in a small amount of money hoping to hit the jackpot. It hardly works since you have to be right about the change in price, the direction, as well as the time frame. Instead, selling is like making money slow and steady. Option selling is like providing insurance to someone who hopes that the price goes up but takes insurance if the price goes down. You can pocket the premium when nothing eventful happens. You can sell the volatility and the time and gain whether the market is rising, falling, or just stays flat. Hope this helped. Please like, share, subscribe, and most importantly, please comment so that I can make the next videos accordingly. Thanks for watching.